whatever we have done, we have worked on the classic GL. We have not activated the new GL part. Okay, so by default, SAP system, whenever ECC 6 is there, because we are working on the latest ECC 6 version, it will activate the document splitting. That's why whenever you are practicing in the first 3 topics, you used to deactivate the document splitting, then you used to proceed. Now, without deactivated document splitting, we will be working and we will be seeing how the document splitting works, how your parallel accounting, that is your leading and non-leading ledger, works. Okay. NewGL is one of the tool which helps to report the things in better way. Okay, NewGL, it is not going to impact your posting. It is not going to change any kind of process. It is only the way wherever a customer invoice, vendor invoice, or whatever you do, it is not going to impact any of those transactions. It is only an additional tool which will help us to report differently and view. Document splitting will help us to view the postings in a better way, which will help us to understand more in detail how the system is behaving. Okay, I'll just show you. Okay, let me get configurations. Okay, I have a separate configuration document which I'll send it to you. I'll send you. Okay, this is not in my regular step-by-step notes. This is, I have given all the step-by-step. So following this step-by-step, you can easily understand. Now, second thing. First, let's understand the parallel ledger or your parallel accounting. Okay, here, first thing you need to understand is leading ledger and non-leading ledger. Okay, any idea what is leading ledger, non-leading ledger, Kishore? Anyone, Kishore or Vanessa?
Yeah, leading ledger is something where it is defaultly designed by the SAP itself. It is the main ledger where we post all the transactions.
Correct.
Yeah, non-leading ledger is another parallel ledger. We will define in parallel to the leading ledger based on the different accounting principles, or to report in a new accounting principle. I mean, like CAP or IFRS.
Oh, correct. Okay. Now, what exactly Kishore here trying to say is leading ledger is always default defined by SAP, and we always follow it as a 0L. We always consider, we can modify it, but we always suggest that leading ledger let it be your 0L. Non-leading ledger, other than 0L, whatever things we define in SAP system, that is your non-leading ledger. SAP system, we can have only one leading ledger per client. Okay, typically reflects the accounting principle for consolidated reporting, the main set of books. All company codes are assigned to leading ledger by default. Then, other than your leading ledger, all other are your non-leading ledger, and these are more based upon your company code specific, or it is based upon your reporting purpose. Here in the for non-leading ledger, okay, in the leading ledger I can have a separate fiscal year variant, and non-leading ledger I can have separate fiscal year variant. A simple example I'll give you, okay, which will help you to understand. Let's say my company code is in US. Okay, my main company is in India. Now, being the main company is India in US company code, okay, I need to record some transaction which should reflect only to my report which is belong to my company, not in my company code of US. Whatever the transaction is posted to your leading ledger, okay, by default it will be updated to all non-leading ledger also. It will update in leading ledger and it will update it in your non-leading ledger. Okay, by default it will be updated. But whatever I'm updating in the non-leading ledger, it will not be updated in the leading ledger. That means I can specify the transaction whether it should be updated in all my company, all my leading ledger and non-leading ledgers, or to a specific leading ledger, non-leading ledger or not. So by doing this, what I'm doing, I'm specifying, I'm segregating the transactions. Okay, so this is called more of your parallel ledger or your parallel accounting. How exactly it works. So leading ledger, non-leading ledger. So completely this leading ledger, non-leading ledger can be gained only through the parallel accounting by defining your leading ledger and non-leading ledger concept. Okay. Normally, money organization, if you see money organization, they are required to report financial results based on multiple accounting principles. Okay. Let's say your European listed company must report according to IFRS. Okay. Then it come to your US company, they have to follow your US GAAP.
Okay.
So I can, hello?
Oh, sorry.
Vanessa, any question?
I'm sorry, I didn't.
Okay. So all European companies, they have to report according to your international financial reporting standard. When it comes to US, they have to follow your according to US GAAP. Okay. Now even this Canadian listed companies also is now has included from I think 2010, 2011, even the Canadian listed company, they have to report according to IFRS. Now, using the parallel accounting is the posting, parallel accounting is the separation of posting and reporting of financial results based on the various regulation. Based on the various regulation, I can tell which report it should follow. Okay. Now, how it will be gained? Via your leading and non-leading ledgers. Okay. There are different challenges. Are there in your company codes following different accounting methods. First, complex calculation. Second, your collection of your financial data. Okay. Then closure reporting while closing the report. Okay. These are the challenges which we follow. Okay. Now SAP, for that purpose only, parallel accounting comes through the leading and leading process. We call it ledger method, which will help us to segregate the transaction. As I said in this example, like 0L is my leading ledger and non-leading ledger, segregate it and post it. Now, whenever I'm doing the posting, SAP system has an option, okay, where I can view based upon my leading ledger and non-leading ledger, okay, and postings also can also be done based upon my leading ledger and non-leading ledger. Okay, so one by one I'll show you. Okay, just I'm giving an overview. So main purpose here is for your parallel accounting purpose to segregate the transaction based upon the. Now previous version, actually we have a different approach. When I used to support one of the few of the 4.7, there another concept were there, parallel ledgering, which is now completely taken out, and parallel accounting it is to come. Okay. Parallel ledgering, there are lot many challenges reporting wise. Okay, you have to lot many configurations were challenges also with complicated. Now, by coming up this in the new GL, the parallel accounting process, okay, with leading and non-leading ledger, it made very simpler that we can use the process. Okay, here again, two things we can, in general, in practice, when you are practicing, when we follow, we say two process: account method, ledger method. Okay, postings are made to both common and separate accounts, okay, to meet the regulatory requirements in the accounts method. Financial statements are produced based on the various combination of accounts in the accounts method. Okay, so first, posting are made to both common and separate accounts to be regulatory requirement based upon my requirement. Then I derive the statement based on the combination of accounts. In the case of ledger method, postings made to a single account are updated in all ledger based upon my accounting principle. There, based upon the accounts in the ledger method based upon my accounting principle. Ledger specific postings are supported where the accounting principle requires a specific entry. Specific entry. Okay, this should go to only non-leading ledger. I have the option, just post to a non-leading ledger and update the entry. Okay. In my experience, I have seen like maintaining different ledgers, one for IFRS reporting, one for US GAAP reporting, one for local GAAP reporting. In this particular example where I have company code in US, I have company code in Europe, I have company code in India. That is like where my main company is in India and local GAAP reporting is used. Okay, local GAAP reporting, when you say the country where your company, the country where your main corporate office is. Okay. Now, coming to your ledger method. Okay, as I said, there are two type of ledger. Leading ledger, only one leading ledger per client. Okay, which we always consider as a 0L. Okay, typically reflects the accounting principle for consolidated reporting, the main set of book. We call it the main set of books. All company codes are assigned to the leading ledger. Non-leading ledger, other than your leading ledger, all are non-leading. If it is a not leading, everything's are non-leading. Okay. It is more of company code specific, and we can have different fiscal year variant according to my requirement. Okay, I'll show you the configuration. Okay, where to do, how can we define, change, currency, everything. I will. Okay. Now, when we define the leading ledger, we have to activate it based upon my requirement. Based upon my requirement, we have to activate it. Then I need to assign the scenario. That means which accounting principle that non-leading ledger is following, whether US GAAP, whether it is my local IFRS or local reporting. Okay. Now, this US GAAP, local reporting, IFRS, apart from that, we want to define more GAAP. Yes, we can define, but that have standard SAP node which we need to apply. As of now, it is not required, but in the future, let's say some country come up with a new accounting principle, which we are thinking like Mexican. Okay, awesome. Okay, give me 1 minute, guys. I'm getting a call. So your Mexican or Brazil, which one? Okay, Mexican, they're coming with your new accounting principle because there is a fluctuation is more. They have a huge fluctuation in their economy. For example, today Mexican dollar is value is 1 rupee, tomorrow it will be 50 rupees. There is a huge flexibility, okay, fluctuation in their process. So we are expecting that. But as of now, we have US GAAP, IFRS, and local accounting GAAP. Then after that, we need to assign the scenarios. Okay, what are the scenarios which are going to do, which I told you, different reports. Okay, then configuration literally one by one. I'll just take you through, otherwise it will more be in clear. Okay, so first we will do the parallel accounting, leading and non-leading ledger, then document splitting. Okay, now for this parallel accounting purpose, new ledger purpose, I have defined a new company code HM1001, where I have not deactivated the document splitting. No posting happened, nothing. I have just created the company code, created some GL accounts, okay, created one vendor, because for the document splitting, I require a vendor. Okay. Now, using this company code, now where I have not deactivated the document splitting, I'll start configuring the your parallel accounting configuration. Once you do the posting, then you will go to the document splitting. Okay. First, define your non-leading ledger /NSPR. Okay. Now we will be using financial accounting new. Earlier, the classic GL we used to use financial accounting only. Now we'll use financial accounting new. Then financial accounting global settings. Ledgers, ledger, define general ledger, accounting. So 0L is your leading ledger, okay, which is considered as a leading ledger. Can we change to some 0L to other than some leading ledger as a leading ledger, non-leading ledger into leading ledger? Yes, but we do not suggest that. But SAP system gives the option to modify it to non-leading ledger. So let me see which identification is available. Okay, Z1, I'll take it. Z1, I'll say non-leading ledger. I'll just type my company code so that I can remember. But in real time, you will not have so many leading ledger. Here people are practicing, that's why. Now, all the transaction will be updated in only one table, that is FAGL FLEXT. Okay, it's already there. So let me take C9. Okay, you got a message saying that additional configurations are there because we have to do all the configuration. Yet this is the first step of the configuration. So I define one non-leading ledger Z9. Okay, and the TR. Now next is you are defining the currency. Define currency of leading ledger. Sorry, leading ledger currency is already there. So if you go to here also, if you look into your company, I think it will be by default it will come. No. No, it's okay. I did not do this configuration. Okay, define currency for leading ledger. Go to new entries. Okay, type your company code. So all the currencies are derived. then my group currency. So the default group currency is your 30. Exchange rate, the default exchange rate 1, and secure currency and transport currency. These all are standard I'm taking. Okay, transaction taken the currency basis, transaction date. Okay, so M or P or your B based upon foreign currency transaction, whatever you are defining there, that you need to update. If you are defining some new exchange rate, then you have to update the new exchange rate here. Now,
How many currencies can be there, Kashi?
see, we have local currency, group currency, hard currency.
Okay.
So by default in IDS server, group currency is your European currency.
Okay.
Local currency is your company code currency.
Yeah. So there can be only 3, is it? As I can see, company code currency, group
Correct.
currency, and the third
Yes.
local currency is?
I have not maintained anything. If you want, if any other currency you want to maintain, US currency, I can maintain the US currency.
Okay. This doesn't depend on the number of company codes. This is just for one company
Yes.
code. How many
I'm doing
countries it might might have transactions with?
correct.
Okay.
Based upon the reporting.
Okay.
Based upon the reporting.
Okay,
Yes,
sir.
Kishore.
Sir, what is legal valuation and group valuation? I came
Legal
across many
val-
times of this group about group valuation and legal valuation.
Okay.
If I try to put some one or two over there, I mean in the second local currency and again valuation, it won't accept the calculation. I think it won't accept.
Okay. Okay. If I start explaining this, then it will be, okay, it will take lots of time. But note it down, Kishore, I'll explain it later. There are lot many explanations because based upon the profit center currency, what you are selecting, it has to be there. Okay. Just make a note. I'll explain you later how it works. Normally, we don't use, but there are scenarios legal valuation is used. Okay. Just make a note. I'll explain you. Okay. Okay, so I maintain the currency for your leading currency, leading ledger. Next is define and activate your non-leading ledger. I've defined Z9. Go to new entries. Type your company code. You will get a message. Click on yes. Okay, click on no. Sorry, company used to productivity, no. Okay, and again your currency 2 is your group currency. Now here, if you want to maintain separate, okay, if you want to maintain separate fiscal year, then I can use it here. If you want to update any separate different fiscal year variant, we can, based upon your ledger, we can maintain. Now, why we separate? Now let's say my company code is in India. I'm getting a report V3 April to March. But I need to report this company code in US also. Now US follow Jan to December. So to report in Jan to December, okay, in that specific period, okay, I need a fiscal year variant K4. I can update here K4. So when I'm generating the financial statement, I'll say generate ledger Z9. Z9, which includes all the transaction, but it will retrieve the report based upon Jan to December, not April to March. So we can give a separate fiscal year based upon our requirement. Of company code is one fiscal year, but the ledger for this specific non-linked ledger, I want a separate different report or a different fiscal year, the postings related different I want, I can generate here. Now save. This is done. Then define ledger group. Okay, I'll define the ledger group. Okay. Now, when we create a leading ledger or non-leading ledger, automatically on the background system will create a ledger group. If you see here, I did not do any new entries, but it has created. The system will create on the background automatically. You need not to worry anything here. Ledger assignment, okay, that is your representative ledger. By default, system will consider it. We need not to do any configuration change here. Now, the accounting principle. Okay, when we have the accounting, when we are defining for the first time, okay, this accounting principle sometimes we need to copy from the using a SAP note. But here, not many people has used it. So already the accounting principle will be here. So we need not to do any configuration, but I'll just show you. Sure. Okay, define accounting principles. Oh, someone has deleted all the accounting principles.
Basically, the accounting principles will be defaulted.
Gap, IS, IGAP 3 should be there.
Yeah, gap IAS, IFRS.
Let me try if it is allows me. Okay. Generally accepted. Okay, IAS. Okay. Defined, but it should not be deleted because they are on the background. Some configurations are there. Okay, so let's see. So here actually you need not to do this. It will be by default, it will come. Okay, someone has deleted it for this particular one. Now I'll assign which ledger is following which principle, whether GAAP or IAS or IGAP. So here I have only one. So let's say I will follow the international accounting standard. But if you have multiple ledgers, you can, how we have defined Z9 for one leading, non-leading ledger. If I have multiple ledgers, I can define multiple. Okay. Say someone. Yes.
Sir, for the multiple non-leading ledgers, we can assign multiple fiscal year variants. Okay, sir?
Yes. For each leading non-leading ledger, I can have each fiscal year.
So if I am
For example,
okay.
For example, let's say I have company codes, okay, across the world. Now I need to report across the world. Let's say I'm reporting in London, US, and Australia. Then I can have 3 non-leading ledger. Let's say 3 of them. Let's say 3 of them follow different fiscal year as per their income tax procedure. Then I can update 3 different fiscal year. And based upon that fiscal year, I can generate the.
Okay. Sir, and one more thing. What is the use of maintaining these representative ledgers?
See, representative ledger and ledgers. Non-leading ledger we consider as a representative ledger. While posting, it will differentiate. When I do the posting, okay, it should give me an option whether I'm posting to a leading or non-leading.
So we can differentiate while posting
Yeah,
it
the
as
posting.
to
Yes,
post in
each posting. Yes, correct. Each posting. Remember, if I post to leading ledger, it will post by default to all your non-leading ledger. But if I post to a non-leading ledger, it will not update to your leading ledger.
Okay. So if I am maintaining multiple couple of ledgers, so these two ledgers are treated as representative ledgers.
Correct. Representative ledgers. Non-leading
Okay.
ledger is always considered as your representative ledgers. Leading ledger is your main ledger, main set of book we call it.
Okay. So representative ledger is even non-leading ledger, whatever.
Always your non-leading. Yes.
No matter how many non-leading ledgers we
Yes,
maintain.
we can have. We can maintain.
Okay. Okay. Fine.
Just to add to that, Kashi, so usually in a real scenario, we generally post to a leading ledger, isn't it? Everything, so that it
Yes.
automatically gets
Leading
copied.
ledger.
Okay.
Correct.
So,
Okay, but
yeah.
some of the transaction which for their company code purpose, they want some posting. Okay, they will post to non-leading ledger and that report will be generated only to that non-leading ledger company code.
Okay.
Okay, for example, in US they are paying some kind of tax which is not required for the company code which is there in India, but that I need to show in my US report, not in Indian report.
Yeah.
Correct?
Yeah.
So that project transaction will be posted. So Indian posting will be posted everywhere because Indian is my main corporate, US is my sub branch. But in the sub branch, when I posting, I'll post with the non-leading, and that report is purely used for your US income tax.
Okay. So now taking this example of this company code HM01, so always I can report it in two ways. One is India and one is Europe because I have assigned
Yes,
it
not
only.
only two. If I have a more non-leading ledger, I can add the based upon my country. I can have multiple non-leading ledgers also.
Okay. One company code can have many. I can assign it to many
Non-leading
accounting.
ledger.
Yeah, accounting principles also.
Yes, yes, yes.
Okay. So I can put it in Gap,
You are
IAS, Gap.
you are assigning you are assigning non-leading ledger to the company code. Okay. Then you are assigning accounting principle to non-leading ledger. Accounting principle is not directly linked to your company code. Okay. Accounting principle, your local, is by default every time.
Yeah.
But I'm assigning a non-leading ledger to company code. I'm assigning a accounting principle to non-leading ledger. So by indirectly or via non-leading ledger, it is linked to your company code, accounting principle.
Okay. So with this combination, I can do it with for many accounting principles.
Yes, I
Reporting.
can
Okay.
do and
Okay. Okay.
but in general we have only three.
Only three.
Your gap, your ISS and local gap.
Okay. And that IFRS, what is that?
IFRS.
Yeah.
Okay,
Okay.
international. Okay.
Okay.
IFRS and IAS most of the time, yes, those are same. IFRS and IAS, International Financial Reporting Standard, International Accounting Standards. Okay. So principles are attached. Now, here one post transaction which is related to the configuration to the document splitting. Okay, document splitting have other configuration, but one configuration we have to do so that the posting can be done. That is, you are classifying the GL account for document splitting. Okay, here what exactly I'm doing, I'm assigning the GL account range to a specific category And I'm telling, okay, whenever posting happens to this GL account, consider it as a your document splitting rule. What are the document splitting rule which will define? So this configuration is for document splitting, but to post the entry, it is mandatory to do, because this particular document splitting is by default activated in your ECC 6.0 version. So I will assign my GL account range to your document splitting transactions categories. Go to general ledger accounting, new master data, general ledger accounting, new business transaction, not master data, document splitting, then classified GL account for document splitting. Okay, type your chart of account, go to the new entries. Okay, now open up your OBD4. Okay, HM01. So my assets all balance sheet are 12299. 12299. Okay, and the category is 01000 balance sheet items. Then all your profit and loss accounts are 4299. That is your category 2000. Okay, or this is only expenses are there, income are there. So I'll give my expenses, that is 32399. Of expenses. Similarly for revenue. Okay, this configuration more for document splitting, but when I'm posting an entry, it is required to have that entry. Done. This is done. Next. Now, define the document splitting characteristics. Okay. Splitting characteristics for general ledger accounting. Okay. This is also by default system will do it. So, but if you are doing for the first time, then you have to include this. Business area, profit center or segment wise. So by based upon business area or profit center or segment, document splitting will work. The document splitting which is there based upon business area or profit center or segment, we can segregate it. Okay, so as of now, no configuration, here it is required. Next is define the document types for entry view. Okay, classify GL account, everything will do the document splitting. Okay, let's now only look into the. Okay, 1 second, guys. Okay, Kishore had some problems. He is joining back again. Okay, just wait for a couple of minutes. So meanwhile, any questions?
Yeah. What are we defining for doc splitting characteristics for us now? It is via business area or hello?
Profit center. We'll consider as a profit center.
Okay.
Okay, for document splitting, we will use the cost center and profit center, and we will do the posting. Okay,
Okay.
we have activated both all three, but we will use the profit center segment. I have if your financial management is activated, then your segment. But most of the time we use the profit center or business area. Now, business area, as I said, also people are not used, so more use for your profit center.
Okay.
Okay. Let's wait for a few minutes. Let him join.
I had couple of questions. Can I take it
Yes.
later or now? Not related to this
Yeah,
topic.
yeah, ask me.
Okay.
Okay.
While we were doing the incoming payment, say for a accounts receivable customer,
Mm-hmm.
uh,
Mm-hmm.
so we have this standard payment partial and residual payments.
Residual.
Yeah. So uh, so when do in a real scenario when the amounts are equal, like when the invoice and uh, the payments will be equal, we generally use standard. Or,
No, I did not understand. Sorry, Vanessa, what you're trying to say.
okay, we can pay if there are existing credit memos and everything. We can pay in different ways. We can make a partial payment also, or we can make a
Hmm.
residual payment, or we can do
Hmm.
via the standard payment.
Correct.
Yeah. So I understand the residual, a new document will be generated only if there is
Hmm.
some balance left.
Correct.
So always it is preferable to use residual payment, or are there specific scenarios like if the amounts are equal, then
Hmm.
is it good to use standard payment, standard way of paying it?
See, partial and residual payment when normally used, okay,
Uh,
when you are making a payment and we want to clear the line items, we want to see, let's say I have one invoice for
mm-hmm,
1 lakh,
mm-hmm,
okay. Now for the 1 lakh, I'm paying 10, I'm receiving 10,000, 10,000, 10,000.
mm-hmm.
In that case, what I'm doing, I'm receiving partial payment every time.
Yeah,
Now, it will be, if I, let's say I'm doing 1 lakh 10 times, so there will be a lot of line items,
yeah.
which will be kept in your open. In that case, we suggest go for residual.
Okay.
Okay. If you have only 2 or 3 transaction partial payment, you do it. But if you have more installments you are receiving,
Mm-hmm.
then always go for the residual. Partial, okay, 1 or 2 line items, go for the partial.
Okay. And standard will be if exactly one, which generally we use
Yes.
residual.
Res.
Okay.
Residual. More residual. Standard is where you are completely receiving the payment.
Yes, yes. Okay.
Fine. Okay, Kishore. So
Sir,
now,
I'm unable to record it. Can you make me aware?
yeah, sure. I did. Okay, Kishore. So now define the document types for entry view. Okay. So go to your financial accounting global setting again. Hello. Vanessa, Sneha, are you able to hear me?
Yes, Kashi.
Vanessa?
Yeah, Kasi.
Okay. I'll dismiss.
Organizer change the show. Thanks. Hello.
Kishore, can you hear me?
Yes, sir.
Kishore, can you hear me?
Yeah, hello. Yes, sir. I can listen to you.
Okay. So now, okay, Kishore, I can hear you. Kishore, you can put yourself in mute.
Okay, sir. Thanks.
So now, maintain the number. Document types. Then define the document types. See, I think I have maintained it, but I'll just cross check once. Yeah, this is maintained. Now the entry view in ledger, for the ledger, for a specific ledger also we need to maintain. That is your Z9. Okay, for SA I'm maintaining for everyone the same, but in real time we'll maintain different number range. Okay, maintain it here. It is not allowing me to copy, it is not allowing me to. Okay, let's see. I get the error message probably it will allow. Okay. It should. Why it is not allowing? Okay, 80, which is not used. Okay, so it is number ranges are not copied properly. That's why it is not allowed. Let me again maintain the 80 number range. Section 01. Okay. Okay, I'll just explain you again what I did. Okay, this particular step is our regular OBA7 where I have maintained all the number range. Okay, here I have maintained the additional one number range which is for 80. Now for that 80 I have assigned it for my entry view. So while posting only to a specific ledger, okay, it will be updated in this particular number range only for your ledger specific. Define document general ledger view. Normally here we have to copy all. Okay, what are the document type we have maintained in OBA7? We have to copy all the number ranges. Here I have taken 01, but what we have to do is OBA7. So KR. I have already maintained for KR 19. So it should be 19. KZ, exactly what you have maintained in your thing, you have to maintain here 50. Okay, so whatever is there in the OBA7 you have maintained, everything you have to maintain it here. Done. Number range is maintained. Document types are maintained. Okay. Done. Okay. Now all the configuration for parallel accounting are done. /n FB50L. We used to use FB50. Now for 50L.
Actually, could you explain again that the entry view and general ledger view, the different document types that you maintain? Why
Okay.
was that?
See, normally when I copied it from the other company code. Okay.
Mm-hmm.
So 1 second, I'll show you. Okay. This is your OBA7 where we maintain everything, our postings all. Okay, OBA7 regular whenever we do the posting. Now this is ledger, specific to the ledger, specific to the ledger. So whenever a posting is happen in Z9, only to the Z9,
Mm-hmm.
then it will be updated in this.
Okay.
Okay. Now whatever you have maintained in the OBA7, that same thing again you have to maintain in general ledger view, so that you are leading and non-leading both the transaction you can view.
Okay. Okay.
Okay.
Got it.
So first is regular. OBA7 is regular wherever like we have been posting any entry there.
Mm-hmm.
Next is specific whenever only posting to happen.
Mm-hmm.
Third one is for your view purpose. Whatever you have maintained in the OBA7, everything you have to maintain it here.
Mm-hmm.
So that you can view, not for posting, view.
Okay.
Say general ledger view.
Mm-hmm.
Only first two are your for posting purpose. Third one is for only for view purpose.
Okay, clear.
Okay. Now OB50L. Okay. Post entry, yeah, my company code 9/2014. Ledger group. Let's I'll post it go first 0L. Okay. See, not sure I'll have bank account or not. Let me see. Yeah, I have salary account. Dead. Now here I am posting my to 0L. That means it will be posted to your both leading and non-leading. Okay, I am posting to 0L. That means it will post to your both leading and non-leading. Save. Okay. Now, if you want to view the report, FB01L. No, FAGL, sorry, FAGL B03. Yeah, FAGL B03. Okay. Now here, select your account. So if you see, I have selected the leading ledger. The posting will be there in your leading ledger. I have selected this one as a leading ledger, 0L. Now if I take the non-leading ledger, why the posting did not happen to non-leading ledger? Okay, let me see. Thing is happening. Somewhere some configuration is incorrect. Okay, let me post one more and see. See, document number range of general document could not be determined. Okay, assign a number range of table. Okay, there is some mistake. General, okay. We did already, right? This one. It did not copy it. Okay, I'll maintain it again. Everything actually copied from the standard, so I think this one I did not save it. Now it is posted. Okay. Now if you see this one, okay, now this one I posted only to Z9. I did not post to leading ledger. I posted to non-leading ledger. So in the non-leading ledger, there will be entry. But if I check in the leading ledger, the 6,000 entry will not be there. Only the earlier entry will be there. The 30,001. The 6,000 entry is not there. Now again, I'll post one more entry. Now this time I'll post it to your leading ledger. So 8,500. Okay. So if you do not give any ledger, it will by default always go to your leading ledger. Now this entry 8,500 will be posted both in leading and non-leading. So let's check the leading first. 0L 8,500 is increased. In my non-leading ledger, choose the ledger Z9. It is increased. $8,000, $6,000. Okay. If you post only to the leading ledger, if you do not give anything in the ledger here, that means it will post the leading ledger. If it is posted to the leading ledger, that means it will be updated to your non-leading ledger also. But if you specifically post to a non-leading ledger, then it will not update it to your leading ledger. It will be updated to only that non-leading ledger. Any question here?
So, what is the T code for view the new GL report?
Okay, I'll send you the document, Kishore, not to worry. Okay.
Okay.
I have prepared a document. Here everything is there.
Okay.
I'll send you this document. Okay.
So one more thing also, we can define these. I mean, we can post all these transactions at characteristics level in new GL.
No, I did not understand what you're saying.
The transactions which we are posting to the new GL, we can also post it to the characteristic level. I mean, at business area level and cost center, profit center level.
Yes, everything.
Yes. From the cost center, profit center.
Everything, all other. That's the thing. No impact to your transaction. I can use cost center, internal orders, everything. No impact at all.
Okay.
Okay, it's just for your posting purpose. How leading and non-leading works.
Okay. And one more thing, sir, when we need to implement this new GL, I mean, if the project is in the middle of the progress, so at that time we can implement the new GL, sir?
Yes, anytime you can do it. Okay, but there is a huge activity for migration. There are lot many activities. Yes, if you are in a work and rollout project, then you have to do all those activities for migration. This completely different set of process are there. It is suggested to do it at the starting of the project, but if you want to implement after that, yes, we can. But there are lots of activity for the migration which you have to do those activities.
Kashi, yeah, what are the real-time, what kind of transactions, like now I saw income, some commission is received within the company and within the intercompany company codes. So only then it is used, isn't it? Because it is used.
Correct.
Okay.
It is used.
Okay. Internal orders. What are the other transactions? What are the things?
We have not done for you the controlling. Then you will clearly understand.
Okay.
Cost center, profit center, internal orders. These three.
Okay. Okay.
So when we do next week and when I'll show you the controlling, then I'll explain you that.
Okay. Okay. Thank you.
Okay. Now document splitting we have to do with the profit center. Okay, but I'll explain you more in detail in that controlling session.
Okay. Okay.
Any other question, Kishore, Vanessa, Sneha? Fine. Okay. Fine then. Okay, we'll now look into the document splitting. We'll have a just 10 minutes break. Okay.
Okay.
So then you guys can stop recording, and when you stop recording, copy the document, the recording document to some other folder. The important thing in your new GL is your document splitting. Okay. First, I'll give you one example. Then I'll explain you. For example, I'm posting an entry. Vendor account. Let's say 11,000. Okay. Purchase account 1. Okay, give me 1 minute, guys. I'm getting a call. So vendor account, let's say 11,000, and purchase account 1, 8,000.
Kashi, are you typing
Purchase
something on
account
the
2.
screen? Kashi?
Kasi, I'm not able to view your screen. Kasi.
Yeah, same.
How about now?
Yeah, now we can see.
Okay. So let's like there's a purchase invoice. Let's say vendor entry is for 11,000. Okay, we have 2 purchase accounts.
Yeah, now we can
Purchase
see.
account.
Kasi.
Okay, fine. Okay, so now there is an entry. So vendor account 1, and let's say this is related to cost center 1. Let's say it is related to cost center 2. So vendor transaction 11,000, purchase account 8,000, purchase to account 8,000, and your purchase tax. Let's say 1,000. Okay, this is your entry. Now here the purchase tax, let's say I'm considering your PC otherwise, profit center, has to be split based upon the purchase tax, purchase account 1, purchase account 2. The entry should be, this is how it happens without document splitting. But with document splitting, the posting will be purchase tax 800, purchase tax or your input tax 200, CC1 and CC2. Okay, the first entry, if my document splitting is not activated. The second is where my document splitting is activated. So what exactly the document splitting is doing? It is splitting the tax amount also. In this case, based upon the purchase account 1 and 2. So document splitting helps us to record the transaction perfectly. So in the first case, the document is not balanced because your cost center or profit center is not updated. But when I activate, my transaction is balanced properly. The tax entry is also updated to your respective cost center or your profit center. So the main use of document splitting is with this only the main uses. Okay, it balances your document. Okay, how it balance, why it balance, we'll explain that later. But the main purpose of the document splitting is the use of to balance the transaction correctly. Any question here? You guys are able to understand this one? Because if you understand this one, rest all you will be able to understand. Okay, so I will.
So the main use here is we should know how much each cost center is earning or losing, or exactly.
Automatically the posting
Yeah.
happens. So based upon the posting, based upon the percentage given to purchase 1, purchase 2, there will be 2 entry. That entry will be respective to the cost center 1 and 2.
Yeah. Finally,
It will segregate.
yeah, it will go to the reporting.
Balance it
That's why.
properly.
Yeah. Okay.
Correct.
Yeah.
Balance properly it is.
Yeah.
Okay.
Okay. Sir, what is the main base to split these items?
I'll coming that. I'm coming
Okay.
to that. I'm just giving an example. I'm coming to that now. Okay. Now, so this here in this particular splitting, the base is GL account. Purchase 1, purchase 2. Okay. Based upon the GL account, not the vendor. The document which is getting updated, splitting which has to be updated in this example, we have your purchase 1 and purchase 2 is your role. Splitting have two concepts. One is passive, another is active or your rule based. This one is based upon passive because it is considering the GL account which is there already in the transaction. So how it is splitted? Okay, the 10,000 is your total purchase invoice, not with before the tax. So 8,000, 2,000, that means 80%, 90%, 20%. Now it is splitting also in the same. 1,000 is segregated it 80% and 20%. Okay, based upon the transaction. Okay, the system creates a reference to the existing account assignment. Here the existing account assignment is purchase account, and use that transaction or that account assignment as a splitting rule. This is called your passive splitting. Any question in the passive splitting? First understand this, then we will go to the next one. So passive splitting, what it does, whatever the transaction is. Yes. Yes.
So you said transaction, right? So transaction is something like variant, or you're talking about?
No, transaction, my line items.
Okay.
Okay. Here the line items, how it's split based upon the purchase account 1, purchase account 2. How it is segregated. Based upon that, the line item which is not split, that is purchase tax, that is your input tax, that will be splitting. So 80%, 20%. I've given for example here, let's say it is 7,000 and 3,000. So here the splitting is happening 70%, 30%. Okay. So when I do the document splitting view, when I view the export mode, then it will be again 700 and 300. The splitting is happening
Okay.
based
So,
upon
vendor
yes,
account, okay, for this vendor account, there won't be any effect.
no effect,
So,
because
if,
tax is going to calculated on the purchase GL
okay.
account, correct?
Sir, okay, sir. And one more thing, sir. What if I procure some raw material from two different vendors for only one cost center?
But
So,
then
in
there will
that
be two
case,
different entries, right? You cannot post in one entry.
and I mean, I'm procuring it for only one cost center. So, I need to update in
Yes,
that
yes.
cost center.
That's see. Second vendor you will be having second transaction,
Okay.
correct? The
Okay.
second transaction, whatever the GL accounts are there, based upon that it will split. For example, let's say I have only this entry. Vendor 11,000, purchase 10,000 and input tax. In this case, splitting is not required. It is correct only.
Okay.
Correct,
So, I
because
just
already
thought, yeah, it's a single vendor and we're procuring for the same, only one cost center.
correct.
So, there is no requirement
No
of
split, not required. The document splitting will not be triggered.
So I thought like, what if we are procuring raw material from a couple of vendors for the same cost?
Then
So in
the
that case
entries
we
are
have,
different. No,
yeah,
no.
yeah,
First
yeah,
understand.
yeah, understand.
But it cannot be one document. It has to be two
Yeah,
different
he has two
documents.
documents. Mm, yes, sir.
So based upon that document transaction, it will pick. Okay.
Okay, sir, fine.
So you have two vendors means two transactions.
Two
Two
transactions.
transaction means two postings. For each posting, whatever the transaction line items are there, for that it will split. Okay.
Yes, sir, fine.
Vanessa, Sneha.
Yeah, Kash, clear.
This is your passive splitting, or we sometimes will call it, okay, predefined splitting. That means already predefined rules are there. Okay, so that is your passive splitting or predefined splitting. We cannot modify to your predefined rules, your splitting rules. Splitting, passive splitting rules. Now, active splitting is your rule-based splitting. Okay, the system splits the document on the basis of predefined system splitting rules. Whatever the rules we provide, based upon that it will split. Okay, so in the particular example which I gave, the account items and split according to the ratio of purchase account because it is your passive splitting. But if I want to define my own rule also I can define. But defining own active splitting is very rare case because standard SAP has given your lot many predefined splitting rules which is almost all your requirement matches. But still we can have rule based splitting, active splitting, not predefined splitting. Active rule based, passive predefined based upon our requirement. Okay, excuse me. So two rules: passive splitting, passive predefined, active rule based. Okay, for passive splitting no changes. We cannot do the standard, we cannot make any changes. Rule based will define own. Okay, next after this what else important? Okay. Okay. Let's see the now configurations. Okay. This document splitting GL, which I already did it, but here I did balance sheet transactions. Okay. Now expenses I did it. I need to include income also I have included it. Now I have to include the vendor. The whatever the range I have given for the vendor, that I need to include. Okay. Now classify the document splitting. Okay, financial transaction. So this is again document type. I have maintained it. Then defining the zero balance clearing account. This is another important one. Okay. Now, zero balance in the document ensure that document is balanced. The document is also have a specific characters. For example, it is based upon your profit center, or based upon your segment, or based upon your segment, profit center and business area. So anything has to be split. There we have to, based upon the balance clearing account, it will work. So what we will do, we will create a GL account, which is a liability side. Sometimes we can create a set. It has to be a balance sheet item. Then we will assign to the account key 000, and it has to be a open item, so that later I can clear it to the respective charge account. We can clear it to the respective account using the process. Then characteristics rule. Yes, Kishore.
Can you repeat about the zero balance account?
Okay. Zero balance document.
And one more thing, sir. In the zero balance account, so why do we require exactly a zero balance account? And in which scenario will come across this zero balance account?
Okay, I'll tell you. Okay. First, zero balancing the document, it ensures the document is balanced. Okay. And the document is also balanced for a specific characteristics. For example, based upon your segment or based upon your profit center. Now here we can define the characteristics that are used in the balance sheet. Okay. Let's say I have two accounts. Okay.
So characteristic nothing but it's our account assignment object you're talking about.
Yes, kind of. Yes. Okay. So based upon, let's say we are taking profit center as an example. Okay. Based upon the posting, the system generates as floating entries. Okay. I'll post one entry now. I'll just show you one example. With that I will clear. Okay. Let's say I have one account. And the amount is, let's say, 123. I've given here profit center 1. One more is there, let's say 300. Okay, the entry is posted. This is your negative posting.
Okay.
PC.
It is for two different profit centers.
Correct. So I'm posting one entry, one is positive, one is negative. Correct. Now here I don't have the balancing GL account. The document splitting, what it will do?
Okay. It will pass a line item against.
Yes.
Is that debit or credit in both the profit centers? I mean, profit one.
Correct.
So why do we post, only single line item to the profit center? For every item,
So
there
that
will be a contra
it is balanced. It is balanced for the balancing purpose. I have to balance my profit center, right? All the entries should go to the profit center. There should be a proper balance.
Okay. So my question is why we are posting only the only single line item without contra item to profit center, sir. Do we come across these kind of situations in the real time?
Yes.
How,
Where
how,
one entry has to go to one profit center, another entry has to go to another profit center.
Mhm.
In that scenario, this document splitting rule will work.
Can you elaborate this? I didn't get exactly.
See, you are posting one entry here, one with a debit, one with a credit. But credit has to go to your PC2.
Profit center 1. Okay.
Okay. So debit has to go to PC1. Is that document is balanced?
We need to have
right now
a
it's
positive
not.
and negative in each profit
For
center
profit
also.
center.
Yeah.
Correct. I'm saying in the profit center, forget about the GL account. Okay, forget about the GL account. Think about only profit center. Sure. So this is not balanced.
Yes, sir. I got no this point, sir. But my question is not exactly, so why you are posting only a single line item to a profit center? Does there
It's
is
common.
any
It is
situation?
for a, yes. There are lot many situations where one item, in the transaction, one goes to your one profit center, another goes to another profit center.
Okay. Okay.
It's a common practice. It's a very common accounting transaction.
I mean, okay. Sir.
No, I'm not able to understand where you are getting confused, Kishore.
So my question is why we posting only single line item to the profit center? I mean, just tell me any situations where do we post only either debit or credit to our profit centers?
Okay.
I mean, if we post,
Okay.
if any GL
Let's
account
say,
we do require debit credit in this cycle.
okay, bank account. Okay.
Okay.
Let's say I'm giving 3,000. Okay. I have salary for 5,000.
Okay.
Okay. Commission received for 8,000 in one posting.
Okay.
This is the entry. Here I have one debit. Here I have one debit. Here one have credit. This line, this posting is clear for you.
Bank account debit, salary account debit, commissions. No, sir. Bank account debit, salary account should take it.
Huh? No. What is Kishore? What is it?
So I think if bank account is debited, then salary account should be credited, right? So if we are providing the kind of transaction, this kind of transaction.
Why this transaction is incorrect?
Yeah, I think if we are providing the salaries to the employees, then we need to debit the salary account and credit the bank
Okay.
account.
So similarly, for the same
Mm-hmm.
thing, I am receiving the commission also.
Okay.
Then
Okay, sir.
so here these three are debit 8,000, one received 8,000. It is knocked off. Balance is 0.
Okay.
Similarly, here I have given PC1, here I am giving PC2.
Okay, okay.
Okay, one more example. Let's say in one transaction, okay, I am paying the commission and receiving the commission, let's say. Same account. I don't have separate GL account for commission received, commission paid. Okay, in the same transaction, I'm receiving the commission, I'm paying the commission. This is for PC1. This is for PC2. Is this entry is correct or wrong?
Okay.
So in these cases, your zero balancing feature comes to the functionality. Okay?
Okay, fine.
Your accounting entries are not clear, that's why you are struggling to understand.
Yes.
Okay? Entry, see, debit credit is clear here, 0.
Yes, sir. Okay.
Correct? Debit is 8,000, credit is 8,000. So entry is correct.
Yes, sir.
Okay? So these kinds of scenario, there will be a zero balancing
Zero balance.
entry. Clear now? So for the zero balancing, you have to, the account assignment, you have to do create a GL account, assign it. Then this particular, we have activated business area profit center segment, all three. Okay, but we want to only work with the profit center, I'll work with the profit center. Then I'll create two profit centers to purchase cost element. I'll assign the tax code to the cost element and I'll do the posting. Then I'll go to the general ledger view. Then in a regular entry, it will post like this, 3,000 debit. But when you go to the general ledger view, it will split. And it will show you the in the export mode. Okay. Any question here? I have not created the cost center, profit center. I'll create it.
So Kashi, the normal this vendor and receivables, accounts payable and receivables that we do, we can either do it in classic GL that earlier we had seen, or in this way. This is new GL.
No, this is just a view.
Okay.
This does not, as I said, it is not impacting any of your transaction. If you see, my total posting is going to my one purchase, tax purchase. This is in FI. No impact. Just a view where it is properly splitting or not. In that new GL, in the export mode.
Okay. So we will do the postings in the normal transactions
Only
that
the sales tax. Yes, normal transaction only.
FB70, FB60, we will do it
Yes.
there only. But later we
Correct.
can view it to see whether it is reflecting the cost center, so we can get appropriate reporting.
Absolutely correct.
Okay.
See, when, for example, let's say I have a expense and I need to segregate to different cost centers. Okay. When I view the financial report, it will not show cost center wise. It will show only the posting wise.
Yes, yes. Yeah. So when we do the, I think if I remember, when we're doing the invoices or something, it asks that please provide the cost center. So I will give the
Yes.
cost center there, and that will reflect later
That
here.
is only, yes, that only in the, that cost center wise report that will be shown only in controlling, not in FI.
Okay, okay.
FI is only total expenses.
Okay. Yeah.
Not the splitting, not the distribution or splitting. That is only for our internal purpose.
Yeah. Okay, okay.
Okay.
And then it will
Okay,
tell
one
what
more.
was the balance and what was the loss. What
Yes,
was,
I have one more example I'll tell you. Okay, Neha might be knowing this example. So in my company, let's say I have 3 production department and I'm spending, let's say, 60,000 on my transport charges.
Yeah, you'd explain in the first class, I think.
Okay, so because this is basic.
Yeah.
When I split, the posting entry is transport charges debited to bank. So when I do the splitting or distribution, not splitting, distribution in controlling P1, P2, P3, in controlling I can see P1, P2, P3, but in FI the entry is same, unchanged.
Yeah, clear.
No impact to your entry.
Okay.
Okay, the thing, new GL is purely for your, it does not impact your transaction. It is purely for your more of helping reporting purpose. Okay, any questions? Kishore. Kishore, are you there? Kishore, any question here?
No, sir. I'm good. Hello?
Yes, yes. Yes,
Yeah,
Kishore.
fine, sir. Yes, sir. Okay, I'm fine.
Okay. Okay.
Okay.
See, until unless you post some entries, see the entries, you will not clear. So sit, post the entries. I know it is a little complicated. So when you post few entries and view the report, then you will understand more clearly. Okay. So you do post, create one company code, post some entries. Still, if you have any clarification, you have any doubts, then I'll try to give some other example and try to understand more in different way. Okay. Now, let's do the configuration. First, classify GL account for document splitting. Before that, let me see /NOPT3. What is the number range I've given? I forgot. SPRO. Mhm. Twenty-three. 23 is also not there. Okay, I'll just take one, maybe 90 otherwise. Zero 4. Okay. So whatever the vendor account number range you have given, that we have to specify that classified GL account for document splitting. Okay. So I have taken SAP reference IMG. Account. So here I have already done. Now I have to add the your customer and vendor customer range. That is your 04. 400 to 4002 and the category vendors. Okay, I have to give a separate range. Okay, I have here already revenue. So I'll need to create a new group itself. Okay, let me create. Okay, I'll create a new vendor group, HM01. Let me give this range 05. Six, 3 zeros, 5 double 0. Okay, so I create a new group which is not overlapping and have assigned it. Okay, this warning message. So balance sheet, expenses, purchase, everything is updated. Okay, balance sheet is updated, customer vendor. Now this number range I'll assign to my vendor account group. Okay, earlier it did not allow me to say because already I had a range. So 400 I was trying to give. There should not be overlapping. Always it should be unique. So this is done. Now GL accounts, sorry, for your document types, we have already maintained it. So that is fine. But still let's check it one more time because I don't know why it is not saving every time. Classify document type for document. Okay. It is also there. Now for define the zero balancing account. Before that I'll create a GL account. Zero balancing account. So under liability and it should be open item. An item. Okay, now this GL account I'll assign to my zero balancing. Under account assignment 000. HM01. One equals 2. This is done. Document splitting characteristic is active. Now GB02, maintain profit center document posting. Okay. Group original posting. Okay. This actually we have to do in the controlling. So I'll explain you in the controlling. As of now, just maintain the number range. For SNEA, it is done. Okay, 2014 12999. Okay. Now I'll create the profit center. So then I'll assign the profit center to your cost center. KE51. Let's say HM01. Any identification you can give. I'm taking the company code and PC1. Okay. Person responsible, profit center group. Okay. Segment is optional. Okay. So it is inactive. Profit center always we need to activate. Similarly, I'll create PC2. Copy from the PC1. Now I will create the cost centers. KS01. Let's say this is my production 1. Okay. What are these things, cost center category? Everything I'll explain when we will do the controlling. Okay. So profit center, I will assign what I have created for PC1. Similarly, CC2. Then to credit purchase I will create and assign the tax code. Okay, I will change the name. This is credit purchase, let's say 1. I will assign the tax code. Okay, I'll create credit purchase 2. Sales tax, purchase tax, GL account is there. This one I need to assign for automatic posting. OB, no, I forgot that code. Let me see that code.
I think OBXU.
OB40, OBXU for your special GL.
Special.
Okay. MWS VST. Okay. MWS and VST. For output tax, so we need to assign for input tax. Input tax is your purchase tax. This sales tax, purchase tax. Any other entry? Account assignment in the profit center /n OK P9. Okay. HM01. That's the thing I was thinking. So this both the credit purchase I need to extend to your controlling. So this is created only as a FI. To extend to the controlling, I have to convert to the cost element. Okay. Sneha, sorry, for Vanessa, I will explain you all these things. Okay,
Yeah.
you just understand the postings.
Okay.
Change. Okay. Now it will appear.
Kashi, Kashi,
Mm-hmm.
why is the zero
Yes.
balance account in the liability section of GL accounts?
We normally select as a balance sheet item, not liability. Okay, so I don't have any balance sheet account group, so I've given it the liability. Then profit center, like it's profit center mandatory. Similarly, HM01. HM01, detail per business area, profit center. The profit center is cost center is HM01 CC1. Okay. 2. CC2. Now system is ready for the posting. So I'll post an entry. Okay. /NFB60. Hopefully all the configuration works fine. Let's see. No, okay. We have not created the vendor, right? So let me create a vendor. Then FK01. The account group we have a issue. Let me see.
Thing vendor. You see?
Yeah, in the account group, someone has already used that number range, the vendor creation. So let me change the range. Number range 05. So let's me try to keep here. Hopefully it works. It is not working.
You can use an existing vendor.
No, the number range will be again problem. Because in the GL account assignment,
Uh-huh.
I've given the range, right? So it will not accept.
Okay.
So we have to take the exact number. And this is new company code I've created. So, okay, let me see. This one works. 06. Okay. Now let's create a vendor. Whew. Okay, done. Now I'll post a entry. Is VS01, change it to our company code. Okay, this is the one. Let's say 11,000. Calculate tax. P1. Okay, then the cost element, credit purchase 1, credit purchase 2. Okay, let's say you are 8,000. Okay, so I have to assign a cost center. That's why it is asking. Based upon the cost center, it will pull the profit center because we have assigned the profit center your cost center. Okay, now before saving, go to simulate general ledger. Document, simulate general ledger. So it has split now. Sales tax, purchase tax based upon the 8,000, 3,000, it has split it. So sales tax one entry, got it, second entry.
Could you show that simulating? How did you do? Again, please.
Document, simulate. Okay?
Okay.
Document, simulate general ledger.
So we can view the same document in new GL, right? We define the new GL.
This is the new GL, right?
Here the ledger is showing is a OL.
It is all the ledger. I have given to the both leading ledger. So it will post in the both.
Okay. So we view the same, okay. In the new GL also we'll see the same line items, right? Same this.
Yes.
package.
This report is new GL. Documents and similar general ledger is your new GL.
New GL. Okay, I mean to say is
this is your regular document.
Okay.
Similar general ledger. Okay. If you want to see all the rules and everything, click on export mode. Taking time. Okay. Okay. Any error message, anything. If you have any error message, export mode, you'll find here. If you have any incorrect entry, anything is posted incorrectly, you can view it here. It will show here. Now it is not showing any error message. That means all the postings are. It will show in the red mark. Okay. Here it's showing everything is correct, or you can view in the log. No message.
Sir, what is this?
That means zero balance
What is
method.
this?
Zero balance method. But by default that take for 000 account assignment.
Okay.
Okay.
And here, P means what?
That is the thing. The value that account assignment 000.
Okay.
That is considered here. It will apply as a.
Okay.
Right. So any error message, you can come and view the log. Then, if it is not splitting properly, it will tell you what is the error message here. You have to, if you see here, no messages now. That means everything is correct.
So the business transaction. So those business transaction variants will all be default
That's
basis.
standard. Everything is standard.
Okay. These were, business transaction 300.
Yeah, we have
So
managed.
300 is for vendor. I think it's item category. Okay.
Correct.
So this is transaction variant 000. So all these will be defaulted by the system itself.
Yeah, we need not to worry about that. That is standard.
Okay.
So if you see 8,000, 3,000, it has split exactly on that percentage. Profit center, profit center.
We had defined this percentage when
So
we.
we can view this. So we can view the same transaction in the Z9 ledgers that we created, the parallel ledger,
Yeah,
parallel one.
but I have given only both a ledger. You want to create only a ledger view, you can create.
So how to do this? I mean, just by clicking the ledger,
Ledger
we can,
change. Yes, change the ledger.
Other ledger we
Other
can
ledger
include
one.
in the parallel ledger.
Yes, correct. Which ledger you want?
Okay. Okay, please.
Yes, Vanessa.
Yeah, we had given this percentage of splitting while we defined the profit center.
No, it is active splitting. Already whatever the
Or predefined. Okay.
credit purchase, that's based upon that it works.
It was active splitting, you said?
Yes, based upon the line item, it will work.
Okay.
Predefined.
Predefined. Okay.
Okay. That's it about document splitting. Okay.
So I have one more.
Yes, tell me.
So can you show me any entry with zero balance accounts?
Zero balance transaction in idea servers you cannot. It will not work.
Okay.
Because
Yes, I want
in the
to check
idea
how
server
you-
what happens on the basic in the idea server what happens, it will not trigger the GL account. For that we have to have a specific kind of business transaction which we have to come with the SAP node. I'll try to apply that note and try to show you. Okay, we have to do a note and we'll just talk to Nabab guy if he can do it, then I'll just tell him to do that, then I will try to do that. Okay. Fine, then practice guys these topics. Vanessa and Kishore, you can log off. I'll talk to you for the next section. I'll let you know the next section. Okay.
Okay, Kashi.
Sneha, okay. Sneha, you stay back. Just I'll talk to you for a while.